What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. This is our late night edition tonight. Had a meeting after the market close, so my apologies. I'll be getting this video out to you at normal time on Monday. All right, so it is Friday night. Hope everyone has some nice plans for tonight. Let's talk about this market. Before we do that, quick first disclaimer: nothing in the video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right. So we finally got the rally that we were expecting for the last couple days. Geez, it was such a cliffhanger. It almost felt like I was seeing the dark pool buyers were going crazy buying the market. I haven't even looked at if they did the same today. But yeah, all the signs were pointing to like, hey, there's some potential for a rally here. And in pure suspenseful fashion, the market waits until Friday in the afternoon. So let's talk about it. All these indices were up for the day. S&P 500 up 2.48%. We had the Nasdaq QQQ up 3.14%. ARK Innovation ETF was up 3.89%. That was our biggest winner for the day. And you can see these returns are highly elevated. And that is because the volatility indices are all so elevated, so high. Basically, everyone was positioned for like this big, downturn in the market. And, I saw that and I was like, I'm just going to stay long at this point because, yeah, the odds and the probabilities favor a rally. All right, it's tough for me to talk right now. Volatility was down across all of these indices, and you can see down in a major way, and the breadth finished positive. And there were a lot of twists and turns throughout today's action. And to be honest, I think, I was just talking to one of my buddies about this. I really think that what catalyzed the beginning of this move was the economic data that came out this morning. Let's talk about this. So we got our PCE data this morning. And in my opinion, the most important data that we're getting in relation to the economy is the inflation data. The reason why is because the Fed has basically said, it doesn't matter if the economy is looking good, it doesn't matter if the economy is looking bad, we are going to be tapering and tightening monetary policy because we need to get inflation intact. And really we need to control inflation. So to be honest, this economic data, does it really matter to the market? Maybe a little bit. But what's most important is this inflation data, and this came out in line with expectations. So we had a double whammy today where we had in line with expectation inflation data, which was a big tail risk. Hey, maybe this would have come out like a huge beat, and that would have been bad for the market. So that was a bit of relief. I noticed the future started trading up as soon as that came out, and then the other big tailwind behind the market today was that Apple reported strong earnings. Let's go Tim Apple. And look at this. Apple stock made a relative strength line, new high before price new high. That is awesome. We also broke out of this downward trend line and we closed just above those key moving averages. Let's go. So yeah, Apple, nice move for Apple. And really the move built throughout the day. So yeah, very nice move. So we had some nice catalysts. And then when you combine that with market participants that are just very hedged. Look at this. The VIX was very elevated. We've been in an elevated volatility regime. So that means everyone's loaded up on puts. We were seeing a high put to call ratios. Things that we were going over within the Pristine Capital community. High squeeze metrics, DIX prints. So yeah, the whole nine. Really, the setup was there, and it finally materialized. Let's take a look. We'll check out our heat map first before we dive into the actual indices. Let's check it out. All right, so our heat map right here. Yeah, check this out. So these FANG stocks, they're super important for the indices. I'm actually doing some more work on just these different index weights, but get a load of this. So Apple makes up well over 6% of the total weight in SPY. Microsoft is also 6%. And then from there, it drops off. Drops off significantly. So we had a broad participation, and we got some participation from these FANG names, which is super, super important. If Microsoft and Apple had missed, given how highly weighted they are, we probably would have had like a significant tail event in the market, but they both reported good earnings and the market stabilized. Alrighty, let's take a look at our sectors and style factors. Sectors. So energy was actually down, and this is something to monitor for. So energy, I know it's been in a great trend, and I'm not an energy expert. I know it's related to like some geopolitical tensions. It's related to some energy shortages, like basically some like, I don't want to call them one-off events, but there's like external forces that are pushing on these energy prices. They're in a great trend, but I would not be surprised if as soon as those forces lift, the wind comes out of the sales of these stocks. But these are in the best trend. They were down 0.42%. Gold miners were down, and cannabis was down. But other than that, we had some really nice action. The ARK ETFs got their nice bounce. There was this incredibly funny Jim Cramer little blurb, not a blurb, like a little video clip that came out. And he's like pouring like gasoline over the ARK Innovation ETF names. You got to check it out. But he literally put the bottom into the ARK ETF, which is pretty funny. Now this XLK ETF up 4.37%. Really nice bounce. And I know some people are going to say, oh, this is a bear market bounce. Maybe it is. But hey, for right now, these dark pool buyers are buying. And we are seeing good things. We saw Apple report good earnings. We saw the inflation data come in line. So we'll just have to take it. And then for these style factors, the growth style factor did the best of 3.52%. And then seasonality, check this out. So the seasonality as well, we only have one more trading day in January. And then heading into February, the seasonality actually improves a bit. So yeah, we got a couple things working in our favor at this point in the market. So let's take a look at these indices. My trend model flipped on a closing basis to a +1. And I must say, moving forward, this is something that I want to work on, in my own trading. My trend model did a great job at basically flipping negative as soon as this market malaise started. And I must say, I was able to close out of exposure, get to cash, and that was great. But I will say that I started to take some long entries that really weren't appropriate, I must say. And just try to really like poke at things when it didn't really make sense to, or like test buys or whatever. This trend model flipped +1. I think moving forward, I want to use this trend model to get me out of the market, and then really to get me back in the market, use that dark index. And I think that's going to be a great 1-2 punch. And of course, you always learn things in the market, including me. I'm always learning. All right, so this S&P 500 action, we're carving out, a little basing action here. And take a look at this. This is going to be our new monthly value area for February. It's huge. We're going to be using this starting Tuesday. And as of right now, we're trading inside of that new monthly value area. We are above the 5-day EMA, which we have not been since this false move up here on January 12th. We had a false breakout there, and then from there it was just the waterfall. So could this be another false move? Absolutely, but it is good progress that we're above this 5-day EMA. Now what's interesting is like everyone's saying we're in a bear market. If you're in a bear market, you do have retests of key levels like key moving averages. So could we get a bounce up to the 20-day moving average? It's certainly possible. For right now, let's focus on that 200-day though. Got to get above the 200-day before you can get above the 20-day or test it. But yeah, trend model's positive. Dark index is telling us to remain long, so we're looking good. And then this hourly chart, you can see, wow, this is incredible. So we've been range bound, this whole week, right? And we ended up finishing out positive for the week. We're going to be trading above this new weekly value area. And look at this as well. We're kind of bouncing around in all these different time frames. But this is our weekly chart. And check this out. So this is our yearly value area. And this is our 50 period moving average on the weekly charts. This is 50 weeks. And I was curious to see, like, how are they going to close this weekly candle? It would be crazy if we closed below the 50-week moving average. Sure enough, we got above it. We put in a green candle. And for all the doom and gloom, markets finished positive for the week. Pretty crazy. All right, let's take a quick look at our Nasdaq. Nasdaq was up 3.17%. Nasdaq really does not look quite as good as the S&P 500. Yeah, in the grand scheme, this is just a little bounce. Nasdaq basically put in a doji candle. And then the Russell, this one just looks horrible. Russell complete breakdown and still put in a red candle. So yeah, Russell just looks completely broken. And then we have our Dow Jones, which Dow Jones put in a nice green candle. This made it all the way through value, poked out to the other side, and now we're still in this bottom half of this yearly value area. So yeah, Dow Jones and the small caps really haven't been my focus lately. But let's take a look. We will go through some of my trades for today. And what did I do today? So I sold some Sofi February 18th 10 strike puts for 81 cents. Really just want to buy shares of this company if it gets there. If it gets there, I'll be buying them at $9.19. Let's take a look at Sofi. And I was kind of anticipating we might get a growth bounce today. It looked like everything was just leaning to one side of the fence. I sold these puts when Sofi was down about like 5% on the session. And by the close, not really the best close, but we put in a little hammer candle. So far, so good on this trade. I entered some Zim calls. So let's take a look at that. We have Zim. And one thing I want to focus on is like always just focusing on those market leaders. And Zim, look at this. This is a market leader, right? A lot of these stocks, they're completely languishing. And Zim was out there making a new high today. So really like that. Strong trend. We're going to be above this new monthly value area. So looking good for Zim. And then what else here? So I closed out my SPY calls. These were a nice winner. And these were February 18th, 430 calls. Closed out for 17.17. I paid 12.56. So this was, just using my data science edge. I was like, let me get long the SPY. But these are very short term. They only go to February. So I wanted to book this. And I also wanted to make room for just getting long Apple. I think Apple could really be one of the strongest stocks in the market here for a couple of reasons. Apple. This stock, so reported good earnings, right? It's going to be trading inside of this new monthly value area, but it actually made it back inside the old one too for January. Closed above these key moving averages. And the key here is, one, Apple is a very liquid stock. It's also a household name. If any investor needs to get exposure to the market, Apple is a safe, reliable company. You won't get fired for putting your money in there, etc. So it has that going for it. Also, it just reported earnings, had a nice earnings report. It doesn't report for another 3 months, so this is kind of like cover for this stock. Other thing is, it is not trading at all-time highs. So for an investor that wants like a little discount, hey, it's still a couple % off. It's not like I'm getting it overextended, that sort of thing. It's got that going for it. And then also, they said on their earnings call, hey, these supply chains, they're not really bothering us. We're not having supply chain issues. So in that sense, it almost seems like they're like impervious to the inflation that we're experiencing as well. So yeah, this one just looked good on so many fronts. Had nice volume on this move higher. So I did end up taking Apple calls, and I went pretty big on this trade for me. So I'll put this in. Oh, and I put it in over here. And you can see I got long those Apple calls. It's a 3-star trade for me. I got long the March 18th 170s for 790. Just looking to see if we can get some continuation in this name. All right. And then what else did I do here? So I had that S&P 500 trade. I also closed out. Basically what I did was I closed out of a lot of the dead weight in the portfolio to make room for this Apple. So I closed out my Kroger for a small loss here, nothing crazy. This was actually 43.24, not 44. So I got to change that. That's my fault. I closed out this Seagate. This one just didn't really work, and it doesn't really look quite as good as Apple. Not quite the same reaction after the earnings. Take a look at this. So I stopped out of this one as well. Although Seagate, not bad, right? Still looks good. But Apple to me seems like it could be the one. So I was like, why would I have my money in this one? I can have it in Apple. So close those out. And then I had this gold trade. This one, I also closed this one out. I had these March 18th 170 calls. Gold really looked like it could have a rally. I think this just speaks to the market conditions and why, you shouldn't be taking as many trades in a weak environment. Gold looked pretty beautiful right here. I entered right here on this candle. And for an options position, usually I'll just let it go to expiry. But I was like, I want to take this capital and put it into Apple. So I shifted that over as well. So yeah, those are my trades for today. And yeah, we'll see how Apple does next week. Let's take a look at this dark index, see how it came in today. Oh, they bought the dip again, 46.5. That's another elevated dark index print. Let's go. So yeah, these dark pool buyers, they're getting aggressive buying the market. Now we have a positive trend model as well, so we're looking pretty good. All right, and we'll take a quick look at our VIG Tech options order flow. It is pretty late here. Appreciate everyone for watching these videos. You guys are awesome. I love doing them. If it helps a couple people navigate their investing journey, or they can learn from something I'm doing, learn from a mistake I made, that really means the world. All right, let's take a look. So we got some Tesla. Ooh, those Tesla call buyers came back in hot. They came back in. We got some SPY activity as well. Let's take a look at this. I want to see, was the action still, loaded up with puts? Because that's all it's been lately. Just everyone buying puts. The market's going to crash. I'm going to clear these out. I'm sure it got more bullish towards the end of the day. I'm sure people are panicking in. Tesla, mostly puts. SPX, some big call buys in there, but a lot of puts as well. SPX, a lot of puts. Let's go. Were they buying puts into this? Yes, they were, baby. Let's go. So I love this. When the market just won't go down, but people are stubbornly buying puts, that's what you want to see. Yeah, Shopify puts. AMD. Wow. So this is, the setup remains, what we've been talking about for the past week. Hope everyone had a good trading week. I will say this was, if you're able to make it through this trading week and preserve your mental capital, you're doing a great job, I must say. And remember, when the market's very choppy like this, it always helps just get up from the screens. I actually got up from the screens today. I had a haircut intraday. Got up from the screens. The market was chopping around, whatever. And the market had a pretty big dip intraday. It had a couple of big dips. But I think the fact that I got off the desk for an hour and I wasn't just watching it chop back and forth, I think that really helped me stick with my S&P 500 calls till the end of the day. So yeah, I always think it helps. If you feel like you're getting burnt out or whatever, because when the market's doing this and it's going sideways, I'll talk to people and they'll be like, oh my gosh, the market keeps going down, if they're bullish. And it's like, no, man, the market's just moving sideways. It's really just not doing anything right now. Same thing if somebody is long puts, it's like, Jesus, market won't go down. And it's like, we're just going sideways. So sideways action for active traders, I think, is the most taxing market environment, because you're always just like looking for like, where's it gonna go? Where's it gonna go? So yeah, if you made it through this week, give yourself a pat on the back. You're doing great. And good on you for being patient. And say like if this week was really taxing mentally, like, oh my gosh, whatever, work on just getting up from the desk a little bit more. That being said, that about does it for this market recap video. Hope everyone has an awesome weekend. Thank you so much for watching this recap video. Have a great night, everyone.